In the previous video 5 days ago, when Bitcoin was trading at $20,300, I shared with you all the reasons why to be bullish and not selling like everybody else. I also shared with you where most of the retail have their stop losses and that whales will use this liquidity to pump the price to the upside. As you can see, Bitcoin really pumped for around 30%, and if you are subscribed in this channel, you have absolutely destroyed this market, same as we did with our Paradise Family VIPs. In this video, we will go through some sentiment analysis of Bitcoin. We also go through some technical stuff, so sit back, relax, and let's analyze. Hello ladies and gentlemen, this is Samo from Crypto Paradise, and Bitcoin really made another higher high on a higher time frame, and our trend line, which we have been together with other bullish indicators showing you in the previous video, got respected perfectly. So we are still in an uptrend because we are creating higher highs after higher highs together with higher lows. Not only this buy zone right here worked perfectly, but also the exact level at $19,550. If you are subscribed in our free Telegram channel, you know already for around 3 weeks what is going to happen next, because we have shared with you step by step the price action, how it's gonna happen. So the first level, which we told you it's gonna be hit before we moved to $29,300, was the $19,500, and as you can see, the whole surge to the upside for around 30% happened exactly from that level. Right now, when we are still at the Bitcoin CME futures chart, let's take a look what other CME gaps we have above and below us. Because this move for 30% happened on the weekend, we have left behind another CME gap which needs to be retested. So the gap actually is at around 20,000 to 21,000. So let me just move the trend lines right here, the upper trend line to the previous downward trend line, and this upper trend line is gonna be at $21,000. So this is our CME gap which is below us, and it's actually almost 15% below the current market price. Yes, so in order to close this gap, Bitcoin will need to drop around 16%. However, there is still also a gap above us right here. So let me put a trend line right at 27,000 and the upper trend line at 28,920, which needs to be hit in order to fully close the CME gap. So from the current market price, this upper CME gap is also around 15% far away from the current market price. So only by looking at Bitcoin CME futures chart, the probabilities are almost 50-50, right? If this gap would be closer to here, for example only 8% above us, the probability would be that the higher gap is going to be closed first. However, right now both of these gaps are around 15% from the current market price, so the probabilities are 50-50. So to extend our probabilities and to make better trading decisions, we need to take a look at the regular Bitcoin chart right now as well. So we are at the daily time frame on Binance. This is Bitcoin USDT chart, and as you can see, together with the current market pump above our local top right here, we also hit our Fibonacci retracement level 1.272 right here. So let me put a trend line right at $26,400. So if we zoom out a little bit, this was actually a fake out. So loads of people thought we are breaking above this resistance at around $25,200, and in this week loads of longers got trapped and lost money. Right now this is not the only resistance, because we also have the local top structure resistance right at $25,200, which got retested by once, twice, thrice. So if you know something about the resistance levels, you know that the more times it gets tested, the more people are opening short positions at these resistance levels, right? However, if we take a look at the funding rates, we can see that the funding rates are actually quite positive, which means not many people are taking this resistance zone right here that seriously, and they think that Bitcoin will just continue to pump to the upside. We can also see that and confirm that on current Bitcoin sentiment. So if we zoom out at this, the white line right here, that's the price of Bitcoin. This yellow line above is the sentiment score. So at the below right here at the bottom, when Bitcoin was trading at around 20,000, the score was actually 0.29. Loads of people were bearish. There was multiple news that the inflation is gonna be continuing and that the Feds will again raise the rates. So people were shorting exactly as we have been describing in the previous video. And what the whales did, they moved the price to the upside. They used the liquidity of these shorters, and right now the market makers, they are pushing positive news into the market. So one of the positive news is there is actually some predictions that the inflation is cooling down and the Feds are gonna cut the rates, right? Which they already did, but if you know something about trading psychology, this news actually doesn't matter at all. It's all about probabilities and liquidity. So they are pushing right now some other bullish news right at the resistance. So the sentiment score actually jumped from 0.29 to an absolutely crazy 0.52. So that's extreme jump, and the sentiment is actually getting bullish right at the resistance. So the thing what happened at the bottom right here at $19,550 was that the retail, the normal traders, the average Joe and Jack was opening short positions in a fear that we are gonna to continue in the downwards pressure. So they have put their short positions and opened them around here, put their stop losses around here, their liquidation levels were around here, and whales, as we described in the previous video, really use this liquidity and move the price to the upside. And now the absolute opposite thing is happening at the resistance. Again, we are seeing bullish news all over the market. Also, the banking bankruptcy is kind of positive for crypto, right? So this is exactly what they are trying to make you think, that right now everybody will just leave banks and all of the money will flow into crypto. They are pushing these kind of news at resistance. So right now, as we can see on the funding rates, people are positive, people are longing. They think this move to the upside is going to continue after a crazy 30% surge to the upside. They still believe this is gonna continue. So what they are doing, they are opening long positions right at the resistance, and their stop losses are again right below this last week, and then their liquidation levels are probably something around here. It really depends on how much leverage you use. And if you are a market maker and you are watching this stuff which we are showing you right now, you're gonna totally use this liquidity, because then it's really easy to make money. If you have loads of money, it's just enough to move the price down to these first stop losses walls, and then basically once the long positions are closed for these people, automatically on futures the shorts are gonna open, right? So then to move the price down is very easy for these market makers, and they will be again taking profits around here at the bottom. So this is one of the reasons that the probabilities are actually on the side of the bears right now. This is a third touch of this local top structure resistance, and the rule is being that on a fifth touch is going to break out, because the third touch, as you can see on the funding rate, is not being that significant for the retail to short from. On the fifth touch, however, they will start to realize, okay, this zone is working like a resistance, we start to short. And at this moment, when they say, okay, we're gonna short, this is a significant level of resistance, what the market makers are gonna do? They will do the opposite thing, right? So these retail traders, they have stop losses again right here, liquidation levels right here, and they just push. The market makers just push through the resistance and move the price to the upside. So we are waiting for the fifth touch for the probabilities to be on the side of the bulls. Right now, this is a third touch. As you can see, the funding rates are showing us that the retail doesn't think that this resistance zone is that significant, and they are longing. Let's take a look at 4-hour time frame, because I want to show you also the RSI indicator. In the previous video, we have been describing right here at this level how this RSI indicator is oversold, and it was actually at the same level when the Bitcoin started this move from $16,000, right? So this was the same oversold level, and yes, it worked perfectly. We pumped, as you know already, by 30%. However, right now we are once again going overboard. Also, we have this cross right here, which is even increasing the probabilities that the RSI needs to start calming down. So this is another bearish sign, and it gets us some points on the side of the bears. So the probabilities starts to increasing right now, right? So we have this resistance, we have this RSI indicator which is overbought. The probabilities are now getting more and more on the side of the bears. Also, if we understand the liquidity importance for the market makers from the Bitcoin sentiment, we can also see that being bullish, overly greedy at the resistance also works better for the bears, right? So if we understand that the retail is actually longing here, as we can see on the funding crates, and the whales are most probably gonna use the liquidity to push the price down again, and if we understand that the price action is an uptrend, and if it's a healthy uptrend, it needs to be up, down, while creating a higher highs and higher lows. We understand that we need to start creating another move to the downside and create higher low in this bullish price action, so we can healthily continue trading on this uptrend trend line right here to the upside. So it's never really, most of the times it's not a parabolic move to the upside, right? That's basically not happening in the 95% cases. Most of the times it's quite confusing price action, which will make in the end only money to few people, right? So now when we understand that the funding rates are positive, retail is longing and buying, we need to have some confirmation for the market maker side to really be confident that they will start to sell on the retail. So if you are in our Twitter channel, you have maybe saw this breaking news Bitcoin whale alert, which we shared with you like 3 hours ago. And what it says that basically some whale or whales are moving their Bitcoins to Binance, right? So if they are moving their Bitcoins from hardware wallets to exchanges, what does it usually means? It means that they will sell their Bitcoin on exchanges. So this is another confirmation, and it increases the probabilities that the Bitcoin will start to move down right here from this resistance next. So as a professional traders, we are understanding that the probabilities are on the side of the bears right now, and we are actively looking for a shared trades. It's not like we are immediately gonna open a short position right from here. We are even waiting for more confirmations to increase the probabilities, because as a professional traders we are taking only the best trades possible, right? So right now what we are waiting for is some kind of double bottom confirmation together with some bearish candlestick pattern on a 4-hour time frame and also 1-hour time frame. Once we get the confirmation, we are gonna ride Bitcoin with the market makers back to our previous level of support, and we are quite confident that this CME gap below us will be filled as well, which is 16% below us right now. So once again, ladies and gentlemen, the probabilities are on the side of the bears right now. We are waiting for confirmations to open our short positions. We closed most of our long positions already right here at a resistance. So right now it's just a waiting game. However, we will, as always, keep you updated. So make sure you are subscribed here. If you enjoyed this video, click the like button, and I will see you next time. Cheers.